Thanks for that, Stefan. I think the the additionality point which you spoke about how utility scale solar doesn't require concessional or development financing anymore in India. That's important, and it's good to know that development banks are looking at additionality when it comes to funding projects. And also, I think there's a lot of scope for KFW to fund more projects in Kerala from renewable energy and from a green hydrogen perspective. Moving to Mr. Sanjay Vishwanathan, Chairman and CEO of AdiGroupè. So let's focus on a specific instrument here, which we haven't discussed much in terms of energy infrastructure. Invites, right? Infrastructure investment trusts. Why should invites be used to finance clean energy? Can you provide examples of successful implementation of invites in green energy in India or globally?
Sure. Thank you. Can you all hear me? Great. Thank you for that question, Arun. Let me give a bit of introduction to us, because in a way we are a well-kept secret. AdiGroupè started life, believe it or not, based on an inspiration here in Kochi, which is where we have a place called Kaladi, which is the birthplace of Adi Shankara, the famous Hindu philosopher saint, not far from here. So for us at AdiGroupè to make this investment in energy in the state of Kerala is in many ways life coming a full circle. And therefore, we are extremely excited to be part of the redevelopment, rejuvenation, and regeneration of the state of Kerala. So the group has two parts. We are roughly about $4.5 billion family office and another $7 billion balance sheet. The areas that we are now focused on in what I call Adi 2.0 is very much to be pillars of India's economy. Because the vision that I laid out to our group about 4 years ago was we want to be known as the Tatas of the 21st century. And what that means is, like the Tatas, we're pillars of the society. But why Adi is because we want to be agile, nimble, and truly flexible in how we engage. So the model that we want to bring to Kerala, which I think Kerala in many ways, through the leadership of Sri Jyotilal in power sector, I think can become what I call the Kerala model, right? So we'd like InvITs in renewable energy and green to be known as the Kerala model. And what that means is, one, to have a permanent capital allocated to the state. Second is to have institutions as well as retail as a part of it, not just financial sponsors like us. Third is to provide annuity income, which is at least 30 to 40% higher than the BSE index. Today, NSE BSE gives you between 12 to 14%. We can provide, I think, through InvITs, if we structure it right, anywhere between 18 to 21%. Now, that is significant if we want to create employment, because where we want to go with InvITs in Kerala is not just focus on solar from a renewable perspective, but also storage. And storage, I think, has a fantastic opportunity for us to create local entrepreneurs. And Kerala, after all, is a state of local entrepreneurs. And that's where I think there's a big opportunity for us. So I think we've done a lot of homework on this, and we think we're ready to bring an InvIT model, which will have two parts to it. One is focused on solar and storage, the second on hydro, because believe it or not, Kerala is also a state that is quite advanced and sophisticated and mature with their hydro capacity. Now, InvITs at the end of the day can provide not just stable returns, but also governance. Because unlike some of the other fund structures, in InvITs you actually have a triple layer of governance. You have a trustee, you have the project manager, and then you have the investment manager. These are all institutions. And therefore, a model that would be right for India, which can actually be born here in Kerala, is a world-class InvIT model focused on renewable energy, which India needs. India has got some very good, again, to your point, Arun, India has had some good case studies on InvITs. For example, InGrid, which is the grid InvIT, has been returning about 12%. KKR was the original sponsor. Of course, now it's become much larger. It's almost $4 billion in size. And they've done it in grid. So if they could do it in grid, you can quite easily do it in the energy production as well. So I want to summarize by saying that, like all investment instruments, InvIT will also have risks, no question, because the biggest risk, as we were talking offline, and our esteemed panel here, member Surbhi Goyal of World Bank, correctly raised, the issue has always been with Indian power projects not being completed on time, which I can use Stefan echoed from a KfW perspective. I think that is spot on. And this is where, again, InvIT can make a difference, because 60% of InvIT capital is actually used for existing projects that is monetized. So state governments can now monetize that, get capital that they can now use for other purposes for state development. And 40% is used for the improvements and redevelopments of existing power projects. So Idiki, for example, you want to expand, we could do that. Renewable energy, solar, for example, you have about 600 megawatts, we can double that, right? BESS, which is about 150 megawatts, we can treble that, right? We can create about 2 million entrepreneurs on this platform. So I think there is a fantastic opportunity. The timing is perfect. And I think with visionary state administration we have in power and a government under the current chief minister, with the right multilaterals like World Bank and KfW and ADB, and of course a fantastic partner in Inkel. And, Ilangovan, we see you as a key partner because I think Inkel can be a very good project manager for this. And if we come in as a trustee with your as a project management, and then we bring the right institutional and sponsor group with the right retail participation at about 25%, having an in perpetuity fund can become a real game changer for the state. Thank you.
Let's talk a little bit more about invites, but briefly. How do they compare with traditional financing? Dr. Ilangovan spoke about equity and debt, right? So how do they compare with those traditional sources of financing?
That's a great question, Arun. I would say three big differences between InvITs and traditional financing. One is InvITs have an ability to recycle that capital for projects, whereas traditional financing will take a return on equity or return on the debt and take the capital back. The capital is not reinvested in additional, say, redevelopment or brownfield engagements and so on. Right? So that's a big difference, because this is a pool of capital that is available for that thesis. And once the thesis has been set, then you don't have to go back to the well again for new capital, right? Number one. Number two is, while traditional financing can provide higher returns, there is significant volatility of it, because the parameters that traditional financing depends on is essentially exposed to market forces. Whereas in InvIT financing, you have stable income that comes in from what is long-term utilities, and therefore one can predict what the returns would be over time, rather than have a certain volatility to it. And that's a big difference, especially when you think about retail investors. It's a big sense of security, The third part is what I call the opportunity for a financial instrument to be part of a nation's energy security. Because we all know energy security is going to be the overriding theme through this century. InvITs, because of the size, scale, depth, and sustainability of capital, will ensure that a nation can actually achieve energy security with it. And therefore, I'd say these are the three big reasons why they would trump traditional financing.
Thank you.